Sri Gurubhyo Namaha children. Welcome to Online Teaching Academy, Ekalaiva. Class 11 Business Studies, and we are learning the lesson Sources of Business Finance. So, in the last sessions we have seen about various sources of finance such as retained earnings, trade credit, public deposits, lease financing, issue of equity shares and preference shares. In this session we are going to learn about debentures and the commercial banks. So, debenture is an important instrument of raising long term debt capital. So, debenture is a debt capital. It is an acknowledgement by the company to borrow some money and it promises to repay in a future date. So, the holders of debentures are called debenture holders. So, these debenture holders are considered as creditors of the company. They are not the owners of the company like the shareholders. So, shareholders are the owners of the company. Debenture holders are considered as creditors of the company like money lenders. So, a company can raise funds through issue of debentures also, and it carry a fixed rate of interest. So, these debenture holders have to be paid fixed rate of interest irrespective of profit or losses. Even the company incurs losses also, these debenture holders have to be paid a fixed rate of interest. So, these debenture holders are termed as creditors of the company. They are not the owners of the company like the shareholders. And a fixed rate of interest is generally paid every 6 months or on yearly basis, and it is a part of borrowed funds. These debentures are part of borrowed funds. So, it is not the owner's fund like equity share capital, it is a part of borrowed funds. And let us see the merits of debentures. So, those who want to get fixed income and regular income can invest their money in debentures. So, the debenture holders are paid fixed income even the company faces losses during some times. And no dilution of voting rights. The equity shareholders' rights or control is not diluted by the issue of debentures, because these debenture holders do not carry any voting rights. They cannot participate in the managerial activities also like equity shareholders. So, equity shareholders have the right to select the directors of the company and they have the right to participate in the management of the company. Since the debenture holders have no right to take part in the election and they do not have the right to take part in the managerial activities, the voting rights or control of the equity shareholders are not diluted. And cost of issue of debentures is lesser than the cost of issue of equity shares. And tax benefits. The interest paid on debentures is tax deductible. So, the tax liability of the business concern is reduced. So, these are the merits of debentures. And when we move on to limitations of debenture, it is a permanent burden on the company. As far as the company is concerned, it is a permanent burden because it has to be repaid. These debenture holders, they have to be paid fixed rate of interest as well as they have to be repaid the principal amount on the due date. So, it is a permanent burden on the company. Sometimes the company may have some financial difficulties. During that time also these debenture holders have to be paid interest as well as they have to be paid the principal amount during the due date. So, the repayment of principal amount for the debenture holders is compulsory on the due date during the difficult situation of the company also. and loss of goodwill. So, every company will have a certain borrowing capacity. By the issue of debentures, the goodwill is lost for the company because the borrowing capacity may be reduced for further borrowings. They cannot go for further borrowings since they issue the debentures. And no voting rights are given for these debenture holders. They cannot become the owners of the company, or they cannot get the voting rights also. These are the limitations of debentures. And the next source of finance is the commercial banks. So, commercial banks, we all know very well that they play a vital role in the for the business people, isn't it? They provide loans and advances, and they support in various ways for the entrepreneurs or business people to start up or to continue their business activities. So, commercial banks occupy a vital position in providing loans and advances for various amounts for different periods and for different purposes also. The rate of interest charged by banks depends on various factors such as the characteristics of the firm. So, the rate of interest depends upon the various characteristics of the different firms and the level of interest rates in the economy. That is, the level of interest which are prevailing in the economy are taken into account by the commercial banks. And the loan is repaid either in lump sum or in installment, or even sometimes if they do not want that borrowed amount from the commercial banks, they can repay it in advance also. They can pay in lump sum or in installments, or even before the period is over, they can pay it in advance if they do not want that amount. So, this is about the commercial banks. What are the merits of commercial banks? Timely assistance. These commercial banks assist the business people on time. So, whenever, as and when the money is required, the business people can approach the commercial banks and get the loans and advances. And secrecy will be maintained by the banks. It will not leak the information that a particular business concern has borrowed the amount from the commercial banks. So, it will keep the loans borrowed from the business people as confidential. And least legal formalities. There are not much complex formalities are involved in getting the loans and advances from the commercial banks. And flexibility in repayments, as I have already told you, it can be repaid in advance also before the time period is over, or it can be paid in lump sum or in installments. And what are the demerits? Generally, the commercial banks provide loans for shorter period. So, the need for security and surety. So, the commercial banks may require sometimes some assets of the company to be mortgaged with it. So, it needs some security, and it will have a detailed estimate about the company's affairs and its financial positions, and then only it will provide loans to those business people. And sometimes there are lengthy procedures are also involved. For example, some terms and conditions may be imposed on some business concerns. Some restrictions may be imposed on the sale of mortgaged goods. That is, the company may not be allowed to sell the mortgaged goods, so that the company's normal working conditions may be affected. So, this is the lengthy procedure which is a disadvantage for the getting loans by the business people with the commercial banks. And before a business firm chooses a source of finance, it has to go through some factors. So, the first factor is cost, and it has to see, the business concern has to see the cost of procurement of the finance as well as how it utilizes the finance in the business. The cost of procurement, cost of utilizing should be lower than the benefit. That is, the benefit should be more than the cost. Okay, so it has to see the cost of getting the loan from various sources. And financial strength and stability of operation. The business concern has to see its financial stability. Suppose if it goes for the borrowed funds, it should see that whether it is stable enough, whether the earnings are good to repay the borrowed amount. So, in some cases, suppose if the financial strength and stability is not good, it is not getting stable income, it can go for the retained earnings or some savings. Okay. Suppose if the financial strength is good enough, it can go for borrowed funds, because if they get money or if they raise finance through preference shares or through debentures, issue of debentures, they have to pay dividend to the preference shares and interest on the debentures. So, they should see that whether they are stable enough to repay the borrowed amount. And form of organization and legal status also plays an important role. Suppose if it is the sole trader or partnership firm, they cannot go for issue of shares. Only the company, only the joint stock company can go for the issue of shares. They can avail the source of finance like a trade credit or factoring or the commercial papers. Purpose and time, that is for which purpose they are going to raise fund and for what time period they are going to raise the finance, they have to see in advance. Suppose if it is for the short term finance, means they can go for trade credit or factoring or bill of bills discounting like that. If it is for a longer period, they can choose the option of issue of shares and debentures. And the next one is risk profile. They have to see the risk involved. The company or the business concern has to evaluate this risk profile. That is, if it is the equity share capital or retained earnings, they need not pay anything to them, because the equity capital has to be repaid at the winding up of the company. That is, during the liquidation of the company, the equity shareholders have to be repaid their principal amount, and these equity shareholders will be paid dividend only if there is a profit. So, there is no risk involved in raising of equity share capital. But if they go for borrowed funds, even if they face loss also, they have to pay the interest on debentures and dividend to the preference shareholders. So, they have to see the risk involved in raising the finance. Then control. So, the equity shareholders are the owners of the company and they have the control on the business. That is, they can participate in the managerial activities and they can select the directors of the company also. Suppose if the equity shareholders do not want to share their control, they need not issue additional equity shareholders. In such a case, they can go for borrowed funds. Effect on credit worthiness. If the company issues debentures, the credit worthiness will be reduced because the borrowing capacity is reduced. They cannot go for further borrowing sources. And they have to see the flexibility and ease of raising finance. Whichever source of funds is more flexible enough and more easier enough, the business concerned has to opt that source of finance for raising funds to meet its business requirements. So, we have come to the end of this session, children. Thank you. To receive our online lessons, please press the subscribe button and you will be getting the updated videos. Thank you, children.